Hi guys, welcome to IT with Ahmed. Today we are going to discuss in this video the future of cryptocurrency. That's an important topic. Please watch the whole video to learn and understand the topic. 2021 was a big year for cryptocurrency, but what's next in we have seen Bitcoin hit multiple new all-time high prices over the past year, followed drops and more institutional buy-in from major companies. Ethereum, the second cryptocurrency, notched its own new all-time high last late last year as well. US government and the Biden administration have increasingly expressed interest in new regulations for cryptocurrency. All the while, people's interest in cryptocurrency has skyrocketed. It's a hot topic not only among investors but in popular culture too. Thanks to everyone for long standing Elon Musk to that kid from your high school on Facebook. In many ways, 2021 was a breakthrough, says Dave Abner, head of global development at Gemini, a popular cryptocurrency exchange. There's tremendous focus and attention paid to the crypto industry. But the industry is only in its infancy and constantly evolving. That's a big part of why every new Bitcoin high can be easily followed by big drops. It's difficult to predict where things are headed long term, but in the coming months, experts are following them from regulation to institutional adoption of crypto payments to try and get a better sense of the market. While exact predictions are impossible, we asked five experts about what they are paying attention to in the crypto space for future. Expect continued conversation about cryptocurrency regulations. US official has shown a particular interest in stablecoin regulation. Lawmakers in Washington DC and across the world are trying to figure out how to establish laws and guidelines to make cryptocurrency safer for investors and less appealing to cyber criminals. Regulation is probably one of the biggest overhangs in crypto industry globally, says Jeffrey Wang, head of the America at Amber Group, a Canada-based crypto finance firm. We would very much welcome clear regulation. Federal Reserve Chair Jerome Powell said recently that he has no intention of banning cryptocurrency like Ethereum in the US, while Secretary and Exchange Commission Chairman Gary Gensler has constantly commented on both his own agencies and Commodity Future Trading Commission's role in policing the industry. The Gensler recently went so far to say investors are likely to get hurt if stricter regulation is not introduced. Plus, the IRS has an obvious interest in making sure investors know how to report virtual currency when they file their taxes. Gensler's and Powell comments are consistent with an emerging view among the Biden administration and other US lawmakers that more cryptocurrency regulation is needed. Like most things with cryptocurrency, a regulation comes with hurdles. There are different agencies that may or may not have jurisdiction to oversee everything, says Wang, and it differs state by state. Clear regulation would mean the removal of a significant roadblock for cryptocurrency, says Wang, since US firms and investors are operating without clear guidelines at the moment. The 1.2 trillion bipartisan infrastructure bill signed by the president in November includes crypto tax reporting provisions that could make it easier for the IRS to track crypto activity among Americans. Even before the new legislation, that's why experts say the investors should keep record of any capital gain or loss on their crypto assets. The new rules may also make it easier for investors to properly report crypto transactions. Exchanges will have to issue 1099-B tax form with cost basis information to investors. Shehan Chandrasekhara, CPA, head of tax strategy at CoinTrack.io, a crypto tech software company, recently told Next Advisor this will significantly reduce the crypto tax filing burden. Regulatory announcement that can also affect the price of cryptocurrency in already volatile markets. Market volatility is why experts recommend keeping a cryptocurrency investment to less than 5% of your total portfolio and never invest anything you are not okay with losing. Ultimately, many experts believe regulation is a good thing for the industry. Sensible regulation is a win for everyone, says Ben Weiss, CEO and co-founder of the CoinFlip, a cryptocurrency buying platform and crypto ATM network. It gives people more confidence in crypto, but I think it's something we have to take our time on and we have to get it right. There's already been a major breakthrough on this front, with the first Bitcoin ETF making its debut on the New York Stock Exchange last October. The development represents a new and more conventional way to invest in crypto. The BITO Bitcoin ETF allows investors to buy in on cryptocurrency directly from traditional investment brokerage they may already have accounts with, like Fidelity or Vanguard. We do it in the equity market, we do it in the bond markets. People might want it here, Gensler said at the Aspen Security Forum over the summer. But some say the BITO ETF is not enough because while the fund is linked to Bitcoin, it does not actually hold the crypto directly. The fund instead holds Bitcoin future contracts. While Bitcoin futures follow the general trend of the actual crypto, experts say it may not track the price of Bitcoin directly. For now, investors must continue waiting for an ETF that holds Bitcoin directly. ETF approval has been in consideration by the SEC multiple times over the past few years, but BITO is the first to gain approval. It's too soon to tell how many investors will get it in on BITO, but the fund did see lots of trading action in its first week. In general, the more accessible cryptocurrency assets are within traditional investment products that more Americans could buy in and influence the crypto market instead of learning it to navigate a cryptocurrency exchange to trade your digital assets. You can add crypto to your portfolio directly from the same brokerage with which you already have a retirement or other traditional investment accounts. However, investing in a crypto ETF like BITO still carries the same risk as many crypto investment. It's still a speculative and while it's still a speculative and volatile investment. If you are not willing to lose the money you put into crypto by purchasing on an exchange, then you shouldn't put it in a crypto fund either. Carefully consider if you are willing to take on the risk of having cryptocurrency in your portfolio at all. Mainstream companies across multiple industries took interest and in some cases that themselves invested in cryptocurrency and blockchain in 2021. AMC, for example, recently announced it will be able to accept Bitcoin payments by the end of this year. Fintech companies like PayPal and Square are also betting on crypto by allowing users to buy on their platform. Tesla continues to go back and forth on its acceptance of Bitcoin payments, though the company holds billions in crypto assets. Experts predict more and more of this buy-in. We have seen a tremendous amount of inflow of attention, and that's going to continue to drive the growth of the industry for a while now, says Abner. Some experts predict bigger global corporations could jumpstart this adoption even more in the later half of this year. What we are looking at in institutions getting involved in crypto, whether it's Amazon or big bank, says Weiss. A huge retailer like Amazon could create a chain reaction of others accepting it and would add a lot of credibility. Indeed, Amazon has recently sparked rumors that it's making moves to that end by sharing a job posting for a digital currency and blockchain product lead. Walmart is also recruiting a crypto expert to oversee its blockchain strategy. While paying for things in cryptocurrency doesn't make sense for most people right now, more retail accepting payments might change that landscape in the future. It will likely be much longer before it will be a smart financial discussion to spend Bitcoin on goods on services, but further institutional adoption could bring about more use cases for everyday users, and in turn have an impact on crypto prices. Nothing is guaranteed, but if you buy cryptocurrency as a long-term store of value, the more real-world use it has, the more likely demand value will increase. Bitcoin is a good indicator of the crypto market in general because it's the largest cryptocurrency by market cap and the rest of the market tends to follow its trends. Bitcoin prices had a wild ride in 2021 and in November set another new all-time high price when it went over $68,000. This latest record high follows previous high points over $60,000 in April and October. As well as summer dropped to less than $30,000 in July. This volatility is a big part of why experts recommend keeping your crypto investment to less than 5% of your portfolio to begin with. But how high will Bitcoin go? Plenty of experts say it's only a matter of when, not if. It Bitcoin hits $100,000 Bitcoin past may provide some clues as to what to expect looking forward. According to Kiana Daniel, author of Cryptocurrency Investing for Dummies, Daniel says there have been plenty of huge spikes followed by pullback in Bitcoin's price since 2011. What I expect from Bitcoin is volatility short term and growth long term. Bitcoin volatility is more reason for investors to play a steady long game. If you are buying for long term growth potential, then don't worry about short term swings. The best thing you can do is not look at your cryptocurrency investment or set it and forget it. As experts continue to tell us, each time there's a price swing, whether up or down, emotional reaction can cause investors to act rashly and make decisions that result in losses on their investment. We can speculate on what value cryptocurrency may have for investors in the coming months and years, and many will. But the reality is it is still a new and speculative investment without much history on which to base predictions. No matter what a given expert think or say, no one really knows. That's why it's important to only invest what you are prepared to lose, and stick to more conventional investment for long-term wealth building. If you were to wake one morning to find that crypto has been banned by the developed nation and it became worthless, would you be okay? Frederick Strand, a CCFP with Lifewater Wealth Management in Atlanta, Georgia, told Next Advisor recently. Keep your investments small and never put crypto investment above any other financial goals like saving for retirement and paying off high interest debt. So this was the topic. Thank you for watching. Stay blessed.